Welcome back to the Crypto Bot channel, everyone. My name is Josh, and now that we're crossing into the third quarter of this year, we're getting estimates for what happened to the US GDP during the second quarter of this year. And these estimates are telling us the recession is here, which I'll be talking more about in just a moment, alongside the Bitcoin chart and Ethereum chart later in the video, so definitely stick around. First of all, before we get into any charts today, we need to talk about what happened to the United States GDP during the second quarter of this year. Because in case you don't already know, the official definition of a recession is 2 consecutive quarters, so 2 quarters back to back of negative GDP. So essentially half a year where the GDP is declining, and that there is the technical definition of a recession. And by the way, this GDP Now page belongs to the Federal Reserve Bank of Atlanta, so it is an official source. But with that being said, their GDP Now forecasting model provides a nowcast, so basically a real-time forecast of the official estimate prior to its release by estimating GDP growth using a methodology similar to the one used by the US Bureau of Economic Analysis. So basically what that means is the following GDP estimates are only that. They are only estimates as of right now. And as it says here in the second paragraph, GDP Now is not an official forecast of the Atlanta Fed. Rather, it is best viewed as a running estimate of real GDP growth based on available economic data for the current measured quarter. So once again, these are not the official finalized numbers, but they are the initial estimates based on similar methods that are actually used to calculate GDP by the US Bureau of Economic Analysis. So even though these are not the final official numbers, they are likely pretty accurate. And so now taking a look at these numbers for the second quarter of this year, Q2, which is of course April, May, June. And the Atlanta Fed GDP Now model estimates the real GDP growth during the second quarter of 2022 is negative 1%. And keep in mind, it is already confirmed that the first quarter of this year was a negative GDP quarter. So all we need is for Q2 to be a negative GDP quarter, like a minus 1%, for example, to put us into an official recession. And now when I say us, technically this is only referring to the United States, but keep in mind when the US goes through something like this, generally speaking, it means the broader world economy is also going through something similar. And obviously for those of you who have been keeping up with traditional markets, this shouldn't really be that much of a surprise, because considering the fact that the definition of a recession is 2 quarters back to back of negative GDP, by the time we actually enter into an official recession, we've basically already experienced half a year worth of recession. And in case you're wondering, the average length of a recession in the United States is between 1 to 1.5 years. But obviously that is just an average. Some can be shorter and some can be longer depending on the circumstances. But based on the average length of a recession, we could end up seeing GDP decline for pretty much the rest of this year. And honestly, that wouldn't be too surprising based on the average length of a recession. And obviously a recession is not a good thing for the price of assets such as stocks, crypto, or real estate, for example. And so due to this, we have seen another pullback in the stock market, although we haven't yet broken below those lows that we set in the middle of June. So as of right now, we're still sitting in a slightly higher low, but obviously the larger trend here is still well and truly a bearish trend. We have no signs currently of a trend reversal. But with that being said, in around 2 weeks, we do have more inflation data coming out, and obviously that could be good or bad, only time will tell. And let's just hope inflation comes in a lot lower than expected, because if that's the case, if inflation actually starts coming back down, then the recession might not last as long as what people are thinking. But anyway, getting into the actual crypto part of this video, and obviously all of this is not good for crypto as well, like I said earlier. So here on the daily Bitcoin chart, we're still playing out this pullback that we have been seeing over the past 5 days or so. But what is interesting on the daily Bitcoin chart is we're actually setting up a potential bullish divergence on the daily Bitcoin chart. As you can see, the daily Bitcoin RSI, as of recording this video, is easily in higher lows. The Bitcoin price could keep dumping and will still likely be sitting in higher lows in the RSI. And technically what this means for Bitcoin on the daily time frame is the bears in this trend are getting exhausted in the shorter term. So basically right now we're not seeing the same sort of bearish momentum at the moment as to what we saw back here, for example, because usually when the RSI starts an uptrend on the daily chart, even during a time period like this, it still means we're due to see reduced bearish momentum like what we saw back in May, for example, back here. So honestly, while this is the case at the moment, I don't expect a massive Bitcoin dump on the daily chart like this, for example. But obviously, that doesn't mean we can't see somewhat smaller bearish moves like what we've experienced over the past few days. And obviously, if you've been keeping up to date with my recent videos over the past week or so, you'll know that over the past 5 days, I've been talking about this rising wedge pattern with a technical price target towards the bottom of the wedge, but we do have other levels of support along the way. And one of the main levels of support I was talking about for Bitcoin on this 4-hour Bitcoin chart between the breakdown here and that technical price target was coming in at just underneath 20,000 at this previous low. And obviously for around half a day, we did find some short-term support around that level. But as I said in my last video that I posted yesterday on the channel, I said if we break below that level just there, I do expect a pretty quick drop down towards around 19,000 based on the golden pocket. When you bring out the Fibonacci retracement tool from this low up to this swing high, we do have the golden pocket sitting at around 19,000 approximately. And as of recording this video, the Bitcoin price has already moved to that golden pocket. And in fact, we're sitting just below it right now. So if the Bitcoin price cannot get back above 19,000 sometime soon, we could potentially revisit this initial low that we formed at around 17,500 up towards 18,000. And obviously that there would complete this rising wedge pattern. So congrats to those of you who actually took this trade when we broke to the downside below these levels of previous support, now flipped into new resistance. And personally, in a short position like this, by now I would have moved my stop loss at least up to my entry price, but ideally into some profits, so that in the worst case scenario, let's just say if we don't even hit the price target and reverse back to the upside, which is the worst case scenario for a short position, then in that worst case scenario, if the stop loss is placed in profit, we're still making profits on the trade. But it is important to mention that that is not financial advice for you. Of course, you can come up with your own strategy if you want to. And that's just letting you know what I'm personally doing with a short-term trade like this. And now giving you a quick update on Ethereum. This right here is the daily Ethereum chart. And we also have a similar bullish divergence set up on the daily Ethereum chart, but we haven't actually confirmed this as of right now. And the same can also be said about the daily Bitcoin chart. Even though we do have this potentially forming, it has not been confirmed. So once again, we have the daily RSI easily in higher lows, whereas the Ethereum price action is actually very close to that previous low that we set back here. If you're looking at the daily candle closes, which is what we need to look at, considering the fact that the RSI indicator by default uses candle closes as its input data. And now taking a look at the 4-hour Ethereum chart, and right now, as of recording this video, the price of Ethereum has pretty much perfectly hit the first technical price target for this rising wedge pattern that I've been talking about over the past 5 days or so. And once again, the subscribers on this channel would already know this, but in case you're new to the channel, there's actually 2 ways to measure the technical price target for a rising wedge pattern. One of the common ways to get the technical price target for a rising wedge pattern is to simply take a look at the bottom of the wedge, and in this case, that's coming into play at around $900 per Ethereum. But there is a second way to measure the technical price target for a rising wedge pattern, which is simply by measuring the width of the entry into this rising wedge pattern and bringing that over to the point of the breakout. And as you can see here, that gives us a technical price target at pretty much exactly $1,000 per Ethereum, which is pretty much exactly where the price of Ethereum has come down to as of recording this video. And also, what is very interesting about $1,000 as a price target for Ethereum is the fact that that is also exactly where the golden pocket is coming into play when you bring out the Fibonacci retracement tool from swing low to swing high on the 4-hour time frame. So once again, as I've been talking about over the past few days, we do have a lot of confluence around that $1,000 level. So personally, being in a short position like this with a lot of confluence and short-term support at around $1,000 per Ethereum, I'll personally be taking at least some profits on a short position, but not exactly closing the entire position in case we do end up completing this entire pattern down towards that initial $900 low. And once again, with every profitable trade, I aim to get my stop loss into profits as well. So in the worst case scenario, if we actually turn around sooner than expected, then the trade gets stopped out in profits. But once again, that's just letting you know my personal strategy. Obviously, I can't tell you what to do with your own money because legally I'm not a financial advisor. And if you want to know how to actually trade these sort of moves, talking about a short position when we go down or a long position when we go up, or if you want to know a strategy that automatically cashes in profits when we see choppy sideways price action, then check out one of these videos popping up right here on your screen. The video in the top left shows you how you can make money whether or not the price is going up or down, and the video in the bottom left shows you how you can make money if the price is just chopping around sideways. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.